Good morning from the Rocky Deserts of the Southwest on this fine April 7th. How you doing, Alex Cole?
I'm doing all right. It's not so nice here. We've got a little drizzle, but, spring flowers are blooming, so that's nice.
Yeah. Why did Snoop Dogg carry an umbrella, bro?
Faux drizzle.
Faux de drizzle. Yeah.
You didn't think I'd know that, did you?
Well, you are Welsh. You're not, you're not from another planet.
That was one of my favorite jokes back in the
day. Me too. All right, Dorks United. Here we are at the GoNoGo show on April 7th. Alex, let's dive into some charts. Let's talk about what's happening in this market. Seems like we've got a little bit of an inflection point going down. So let's start with the top level, just across the asset classes. Where are we at from a trend perspective?
Yeah, so the picture looks good from the asset class map, and we need to keep that in mind, I guess, as we move forward. The trends are still go trends, but they are weakening. So if you look across the top panel, we see that the go trend that took form in equities has really come back to sort of prior support levels and is a weak aqua color, but in that go trend. Treasury bond prices continue to plunge. Strong purple no-go bars there for Treasury bond prices. Of course, rates are rising, bond prices falling. The commodities still in a go trend, also weakening as we come through the week. The dollar, strong go bars, and Bitcoin, of course, as well, still hanging on to its go trend.
Fantastic. So the risk environment has not changed dramatically, but let's dive into the S&P 500 and just take a look at where the US equities markets are at here this week. Obviously, some strength coming out of that first quarter and here into April. Historically, one of the strongest months for equities. But what are you seeing from a GoNoGo perspective, particularly down there at the GoNoGo oscillator, sitting right at the zero line?
Yeah, well, this is what you were talking about in terms of an inflection point. And we're going to see this on quite a few charts as we go through the show. Prices rallied strongly, really historically strong. We had those 10 days in a row of incredible strength, as you said, coming off the lows from the first quarter. But we have come back now, and we've been painting some weaker aqua bars. And we're sort of back down into the support level that was resistance here as we rallied off the lows before. Now, interestingly, this is a shorter term higher high, right? But a longer term lower high. So we'll have to see how it plays out here if we can continue to move higher to challenge those highs that we saw at the end of the year. The important bit to talk about with the oscillator, as you were mentioning, is that this recent price action back lower has caused the oscillator to fall to the zero line. And we know that if this go trend is to persist, and if it can continue prices moving higher, we would like to see the oscillator, of course, find support at zero.
And obviously, when in doubt, we technicians know to zoom out. If we're looking at this on a weekly basis, Alex, still holding that fresh go trend, we've got a pretty clearly defined risk level, both on the daily and the weekly chart, looking to that oscillator for confirmation from a momentum perspective that trend is being ratified by buyer momentum. From the weekly basis, what's your perspective on this chart?
Yeah, just going to be really interesting to see how this resolves. A client talking to this morning was pointing out, and we were discussing how interestingly the oscillators are at zero on multiple time frames, daily, weekly, and even monthly as well. The oscillator at zero. So really looking for support and a really sort of significant inflection point. On the weekly, we are seeing that we're in a go trend, right? We're in a new go trend. This week has been poor compared to the last couple of weeks, but we are in a go trend. The oscillator having broken below zero during that correction, back at zero, and the squeeze building. So it will be very interesting to see in which direction this resolves. If the daily can move higher, then we'll see the oscillator probably move into positive territory on the weekly as well, and there'll be a good chance that go trend continues. Of course, if they break down and we see the oscillators move into negative territory on the daily and then perhaps on the weekly as well, then that would be a real cause for concern for these new go trends that we're seeing on the S&P.
Absolutely. And just as a quick refresher for anybody who is new to the GoNoGo show, if you haven't been here with us so far in 2022, What we're talking about is a composite blend. All of those tried and tested, the quantifiable technical indicators that we've all known and loved. But we want to eliminate analysis paralysis by keeping our charts really clean so we can stay focused on price. So what we're seeing in those color-coded bars up in the top panel is really a ton of information, but we're separating the signal from the noise. We don't want the clutter on our charts, but we do want to capture all that information. So when we see aqua and blue bars, those are in the go trend condition. So the weight of the evidence is that we're in a go trend where we're going long. It's an uptrend, and obviously a sensitivity built into the system, so a weaker form and a stronger form. In the right side of that, we're seeing the no-go bars that were really non-existent throughout this period beyond the COVID crash, and that's pink and purple. Again, weak form and strong form of a no-go or a downtrend. For those who play to the short side, the charts work in both directions. And then, of course, at periods of neutrality and oftentimes when trends are reversing, we see those amber neutral bars where the market is still a bit indecisive. Alex and I love the life and work of Jesse Livermore so much. We call those our go fish bars, as he was known for saying there's a time to go long, a time to go short, and a time to just go fishing. So we want to capture market trends, profit from the meat of the move. And then in that lower panel, Alex, the GoNoGo oscillator is showing us a similar blended construct of multiple momentum indicators. But what's really unique about that, of course, you can use it in the same way that you would use any other momentum oscillator for periods of overbought and oversold. But I love how you've given us an objective zero line, a neutral level. So we know that when we're in trend, if momentum comes back to neutral, that's not a threat to the trend. In fact, that's sort of the natural digestion of gains that the market makes, and so we can see those resurgences as momentum comes back in the direction of the trend.
And that's what we were seeing during this no-go here as prices moved lower, the oscillator falling into negative territory, coming up to zero, being turned away ultimately over and over and over again. And then that first time that it really wasn't, that was what tipped us off to the possibility of the trend conditions changing. So we're right back at that now, but from the other side, looking for support at the zero line in a go trend.
So let's talk about why we are at this inflection point. Alex, let's bring up a chart, TNX, the 10-year Treasury yields. Obviously, bond prices plummeting, but in the inverse move, rates just really skyrocketing. And on everybody's mind, the release of the minutes from the central bankers, the Fed's Open Markets Committee, potentially many governors looking for a much more aggressive rate hike here in the coming months. Alex, I love seeing where those trends persist for yields moving higher on this daily chart. But why don't we start from a lifelong perspective? For those of us born in the 1980s, we've never seen proper rising rate environments, at least from the very long-term perspective. So here on a quarterly basis, going back to that peak in 1981, we've got a steady downtrend, and trend line resistance has really held over and over and over again. So here we are on the right side of the chart, that massive drop off at the pandemic crash in 2020. And really all we have done since 2020 until today is mean revert back to that downward sloping trend line. The overall trend of rates here is to the downside. But Alex, I see amber neutral bars as we're approaching trend line resistance. We see that oscillator building a max squeeze at the zero line. What do you see on this ultra long-term chart of the 10-year Treasury yields?
Yeah, it really is amazing, the historical significance of how low these rates are. I mean, I was talking to my dad the other day about buying houses in the 80s, and you're talking about 14% mortgages, and we just have no conception of that really, trying to finance things like cars and houses now. And so, like you said, really this incredible rally, which to us feels like, and they are historically fast rising rates of inflation and all the rest of it, but we are rising back to, like you said, this downward sloping trend line. So we will see what happens next. This is, until proven otherwise, this should act as resistance. We are seeing amber go fish bars though, having come out of the pink bars on this quarterly chart, and the oscillator is at zero again. So very, very interesting to see whether this provides resistance, and we see this roll back over and everything is okay in terms of the markets moving higher, or if we do break actually above this. This would be historic. This would be really significant to break above this downward sloping trend line. And that could really be significant for what happens in terms of real prices and real costs going up for people around the world.
And this is not that Alex and I are macroeconomists, but obviously the only tool in the central banker's toolkit to fight rising inflation. And again, this is not transitory. The cost of goods has gone up significantly. Estimates in the UK are 10%. Here in the US, we're still waiting on those numbers for March, but above 8% is what a lot of the forecasts are telling us. So to fight inflation, they have to hike rates. And you've all read the headlines about whether or not we can achieve a soft landing. I think you got to break a few eggs in order to make this omelet. And hiking rates is really the only tool that central bankers have to fight the stem of inflation.
Yeah.
So that monetary regime we've been in since the great financial crisis of 2008, easy liquidity, lots of capital being pumped into the system. That's finally caught up with us in terms of inflation. And so we're seeing this real inflection point on the yields, on interest rates, on the access to capital, which is probably taking a lot of investors, giving them some pause as that long-term trend line may indeed be broken here. We're going to watch GoNoGo charts instead of thinking about the dissertation in the macroeconomic space. We could just look for go or no go conditions on those trends. Alex, let's move on and look at the sector RelMap, the go-no-go sectors, not on an absolute basis, but on a relative basis against the benchmark of the SPY or the S&P 500. And here we see many of the trends continuing. Let's talk a little bit about the relative strength that we saw last week in the consumer discretionary sector and how that's playing out so far this week.
Yeah, so it hasn't had the strongest week this week. And we were talking at the beginning of the week about looking for opportunities in really different areas. And it's an interesting type of market at the moment where we were seeing strength in consumer discretionary. I think Dave Keller was talking about it, that strange situation we're in where we're wondering whether to be looking for opportunities in consumer discretionary or something like utilities down here at the lower half of the sector map, which is also, of course, leading on a relative basis. But we've seen amber go fish bars now for the last couple of bars on discretionary. And so we're really overall looking at a more defensive picture than perhaps we thought at the beginning of the week. The outperformance is still energy and it's materials, it's real estate, it's healthcare, it's utilities, and really the leaders taking us down are technology, things like financials too, which is interesting in these markets.
We've talked to a lot of analysts, a lot of folks smarter than Alex and I, talking about the way in which the yield curve has flattened and now inverted. Obviously, financial sector, we can see that that's significantly underperforming the benchmark, and that's really all we need to know. Alex, for that consumer discretionary sector, I think what's really fascinating about this marketplace is just how bifurcated the institutional investors and the retail participants have been in terms of what securities they're really focused on, where they're looking for gains. I know we had a number of really interesting examples coming out in Monday morning's Flight Path in terms of trade ideas, short-term, really volatile bounces. Obviously, this week, a lot of folks paying attention to Twitter as Elon Musk became its largest shareholder. But let's look at the consumer discretionary sector itself in a go-no-go trend chart and just see what's happened so far this week to the XLY.
Yeah, so this is sort of that about face and that turnaround that we were talking about, looking strong relatively to the S&P, higher than these highs from over here at the beginning of the week, and then we've really seen it fall away this week with sort of 1, 2, 3 bars that have brought it back down. Now, I would still say there's an inflection point here, but we have moved into an amber go fish bar rather than holding the weak aqua bars as the oscillator finds itself at zero and the beginnings of a go-no-go squeeze building.
And just for clarification to all of our viewers, this is the consumer discretionary chart on an absolute trend basis. We were just looking at it relative to the S&P 500, just from the trend conditions, looking at the color changes in those panels. Here we're seeing the price action, obviously clearly at an inflection point with the GoNoGo oscillator at zero, but in a neutral daily bar right now. Within the consumer discretionary sector, Alex, I know you were pulling up eBay last week, looking like a really fresh, strong trend. And here we've seen that mean revert as well. I think what's helpful to think about in this in a chart like this is that we've got really clearly defined risk reward. And in the four outcomes of big loss, small win, or big win, we just need to avoid those large losses, and we can stick with trends. We can be patient investors to make sure we find those outsized gains. Here, Alex, new go trend struck and quickly reverted as momentum waned, and now we're back into a no-go trend. So how would you have traded this position in terms of taking signals from the chart?
Yeah, I mean, the great thing, I think, with a weight of the evidence approach to identifying trend means that you're being systematic and you're being objective with how you do it. And so at this point on Monday, we'd seen a new go trend, and we were looking at the oscillator approaching zero, and would have been expecting, or perhaps hoping, if you were looking to get long, or if you were already long, for there to be a bounce off zero and a go trend continuation icon, telling us that momentum was coming back in the direction of the trend. Now you can look at this in a couple of ways. You will have some people looking at the go signal and taking that early aggressive opportunity to get into a new trend. You might also have people looking for pullbacks, and a lot of people will like to see a retest or look for a bull flag, having identified a trend, and then that's when you'd be looking at the zero line to see if it found support at zero and getting in perhaps on a green go trend continuation icon. But let's say you took this go signal, like you said, it's all about loving your small losses and not letting them become investments and hoping that it'll come back. So if you were to get in on this go trend, the go no go trend chart will tell you here that we've got an amber neutral bar, so it's fallen out of the go trend, and that we're also unable to hold support at the zero line. And then after you follow that with a no go flag, then you should have been out of this trade, and you wouldn't be holding on to it hoping that it comes back. Even if it's something sensible, like another way to read it might be saying, okay, well, look, we've got prior lows here, let's see if it finds support. But each time you change your reason for holding on to a trade, you're increasing your exposure to a drawdown, and that's not what you want to do. So the go no go chart here, it identified a go trend and it reversed, and it didn't take off the way you might have wanted. Broke below zero, amber bar, and then a no go, and you wouldn't want to be holding on to it.
That's really that's exactly what I was looking for, and what struck me about these tools is that you want to capture all of the important technical information, our checklist, our rules for trend following. By the way, you sounded just like a turtle trader back there, saying we got to love those small losses. When we're wrong, we want to be wrong small. And so to stick to our rules, right? Just as you said, you could come up with a narrative machine looking for support to prior lows. You could read all about the fundamentals of eBay and consumer spending coming back. The point being, when this says no go, you've got a pretty clear signal to follow your rules and to be a disciplined trader. And I think that simplicity is really elegant, Alex. Thanks for sharing that. Speaking of people getting higher while stocks get lower, can we pull up a chart of Tilray, TLRY? And I know this wasn't in our research this week, but we've heard a lot of discussion about, all right, if risk assets are back on and we're trading higher, then we're going to look for the things that are most beaten down. And obviously we can see this is in a go trend, but oscillator right back at zero as price is consolidating. Alex, if you zoom out a bit, and maybe we just even look at this on a weekly basis, long-term downtrend for Tilray. Obviously, we're seeing a mean reversion back to that downward sloping trend line. We're still in a no-go on a weekly basis. And so my point here is that with GoNoGo charts, we would want to make sure we're differentiating between what's a trade and what's what's part of our investment portfolio. And for things like this, we could always look for those shorter term snapbacks, those mean reversion trades. Maybe looking at this on a 15-minute or an hourly basis. That might be part of your trading discipline and part of your plan. And so there's some great opportunities down here in the bottom fishing realm, right? Finding those that have been most beaten down, that have the opportunity to pop back in a mean reversion style. But just wanted to point out, still got a long-term downtrend on a lot of those cannabis names. All right.
I think it's important too to note that whatever your time horizon, multi-time frame analysis is going to be very important. Like if you were even if you were a long-term investor, not talking about sort of 5, 10, 15-minute snapbacks on the short term, but a long-term investor, if you're aware of this no-go trend that's in place, we're still below zero on the oscillator, we're coming back up to zero now, testing it. Maybe when you're on the daily trend, you're not taking too much note of this new go, and you're looking for new entries to the downside. So I think that multi-time frame analysis, whatever your time horizon, is of course really, really important.
Very well said, Alex. Very, very well said. That's part of the discipline of technical analysis, going back all the way to Charles Dow, 130 years ago, looking at multiple time frame perspectives. Let's in our wrap up here for today's show, let's take a look at an alternative view in a rising rate environment where we might find some really good investment opportunities. And you pulled out one of the REITs, one of the real estate investment trusts earlier this week, GOOD. That's the Gladstone Commercial Corp Investment Trust. Obviously, investors paying attention here to REITs in part because of their 7% dividend yield in the case of Gladstone. So we're earning some income while we've got an inflation hedge in the real estate or real assets space. What do you see from a go-no-go perspective for Gladstone?
Yeah, I mean, I wanted to pull something like this out. One, because this is what investors will do, is if you're trying, I mean, in some ways you can almost match inflation with dividend yield. So if we're in a rising rate environment, you were talking about how it might be 8%. It was 7%, I think, the last we heard. Well, if you're getting close to a 7% dividend yield, right there, you're offsetting some of that concern. But what I wanted to point out was that you can also look for a trend in a security that is giving you some income, but perhaps also in terms of price appreciation and price gains, you can do well as well. So this is the securities Gladstone Commercial, just entered a go trend. In theory, a relatively defensive pick that should do well in a rising rate environment anyway. If you add in those dividend yields, then that's something that people might be attracted to. But from a purely charting go-no-go perspective, we have a new go trend. We had a breakout of a very long squeeze, a little bit of a blip here. But if you imagine this squeeze really is this entire length of the oscillator staying at zero, broke out of the squeeze to the upside, go trend, aqua bars now strengthening to the stronger blue bars. So this is an attractive chart from a technical perspective, as well as the gains that you might get from dividend yields.
And while we've got just a couple of minutes, Alex, I know the comprehensive nature of go-no-go charts includes trend, momentum, volume, but then also volatility. And you just touched on the go-no-go squeeze. Talk to us just a little bit about what that fourth component, that last piece of the puzzle that you brought in. What was it that you were looking for with go-no-go squeeze?
Yeah, so when you're looking at a complete technical picture, you've got to include searching for volatility squeezes. Really, I thought that was very, very important. You might have heard of Bollinger Band squeezes, Keltner squeezes, but the idea that after a significant move, there's going to be some consolidation and some reduced volatility as in terms of price, as the struggle between people thinking that now we've got attractive prices that could be a good value, and then you've got the sellers who were in control of this no-go continuing to think that it's a stock that could be being sold. So you might have very strong activity from a volume standpoint. You see here the oscillator is in a strong blue color, meaning that volume is heavy. But in terms of price movement, you can see how these price bars got smaller and smaller and smaller as that struggle between the buyers and the sellers really played out. And when you get a outcome in one direction, one side overwhelming the other, the ensuing move might be quite significant. It's that sort of back and forth, back and forth, back and forth. And when somebody wins, people will likely pile on that direction of the trade.
You know, I was really attracted to technical analysis decades ago, got out of my MBA program and stopped poring over all of the fundamentals, met Ralph Acampora and many other mentors at the CMT Association. Really, the idea of visualizing investor behavior struck me as so powerful. You can go all the way back to rice pits in Osaka, Japan, and folks like Monahisa Homa inventing candlestick charts as a way to understand that supply and demand relationship, that tug of war, if you will, between buyers and sellers. And so seeing a no-go trend coming into a bottoming formation, momentum coming from extreme negative oversold to then neutral for a prolonged period, building that squeeze. When we do finally resolve to the upside, that's a powerful signal that indeed buyers have taken control, and that gives the probability of a more durable trend in our favor. So, Alex, incredible tools. Thank you so much for spending some time talking with me today. I'm looking forward to seeing you in Washington, D.C. at the CMT Symposium here at the end of the month, April 27th, 8th, and 9th. But of course, next week I'll miss you on the GoNoGo show. Taking our daughter for a little stroll down the Grand Canyon, see if we still remember our hiking boots, which should be a good trip. So thank you, sir, and I'm looking forward to seeing you in a couple of weeks.
Yep, enjoy the trip.
Cheers.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.